Social media feeds are completely flooded with insurance advisors flashing their luxury sports cars and posting aggressively loud motivational quotes. But for many agents, the daily reality is staring at a silent phone, wondering who to call now that their circle of friends and family has dried up. This natural market eventually hits a wall. Relatives start screening calls, offering unhelpful advice, or postponing policy decisions indefinitely. When that wall is hit, many advisors are told a discouraging lie, that reaching the million-dollar roundtable requires an existing network of wealthy contacts. In reality, thousands of first-generation advisors in India reach MDRT starting from middle-class backgrounds, with zero pre-existing influence. These advisors treat MDRT as a mechanical, repeatable system, rather than a stroke of luck or a burst of emotional motivation. Survival in this business depends on treating the operation as a mathematical process, completely independent of an advisor's daily mood or temporary inspiration. Because the natural market is finite, true professionalism requires moving into the stranger market. This means identifying prospects in metros, gyms, business events, or simply talking to local shop owners. The rule in these spaces is to avoid a direct policy pitch. The goal is to start a casual conversation, understand their profession, and allow financial topics to surface naturally. Navigating these interactions does not require a complex vocabulary or expensive clothing. It requires the ability to ask thoughtful questions and listen to the underlying emotions driving the prospect. While most assume top earners are simply the best at pitching products, selling a policy is only one small part of a larger framework. The business rests on 5 pillars: prospecting, appointment setting, trust building, fact-finding, and finally, follow-up consistency. Mastering these specific actions allows an advisor to bypass the judgment of relatives. When executed correctly, a stranger's trust is often far more accessible than a family member's sense of obligation. Moving from the psychological approach to the operational core, achieving MDRT becomes a matter of tracking daily volume. 20 daily approaches filter into 5 meaningful conversations. From those, lock in 2 appointments, yielding 1 completed financial review. Scaling this discipline weekly creates 25 to 30 appointments. Maintaining this volume for months creates the predictable premium flow necessary for MDRT. This scale requires specific operational habits: dedicated morning prospecting, rigorous CRM management, and executing the plan even on days when motivation is absent. Consistently feeding these daily inputs into the system provides the raw data needed to refine sales skills and hit premium targets. At this scale, results are no longer left to chance. To keep the math working, top advisors manage a continuous pipeline, balancing new prospects and pending follow-ups with existing client servicing. This servicing phase is where referrals are generated professionally. Instead of begging for names, the advisor simply offers to guide others in the client circle if the previous discussion was genuinely helpful. Working with complete strangers involves a harsh reality. People will ignore you, insult you, and waste your time. These interactions are standard features of a high-rejection profession. They act as a filter that separates professional advisors from those relying on emotional comfort. Sustaining this level of activity and trust building offers a more reliable path to growth than any viral video or luxury facade. The ability to forge professional relationships with complete strangers is the most durable asset an advisor can own. For practical, reality-based insurance sales content without the fake motivation, subscribe and connect.